Your company has just recently emerged from bankruptcy protection. What got it in there? What's been changed and fixed? How is the company positioned right now? Because, you know, we look at some of the casual dining stocks. It's a good time, I think, in terms of the macro backdrop in this country for them.
It's a great time. So to answer your question, what got us there is Macaroni Grill is an iconic brand, right? It's been around for 30 years. Through that process, you go through different real estate changes. You know, the company's gone through multiple ownership changes. You start to assume and accumulate liabilities that at some point you need to shed. So from our standpoint, when we came in, I've been with a firm called Mackinac Partners. It's a national restructuring turnaround firm. We got engaged by Macaroni Grill a little over a year ago. And the goal was to develop a strategic value creation plan that rebuilt the company, repositioned the company for sustainable growth. To do that, we figured one of the best ways to shed some of the liability, the most effective way to shed the liability was to take it through a restructuring. So as part of our plan, it was successful, it was very successful. We were in and out in 3 months, and through that entire period, through the last year, we've developed and implemented the plan, which has resulted in significant same-store sales growth and you know, a reestablishing of the brand and the company.
So what's the plan now? Are you growing locations? Are you looking to go public? What's the long-term vision?
So the long-term vision for Macaroni Grill, when we came in, was really to first stabilize the business and to build a platform. And by platform, I mean systems, people, process. So we've really focused on doing that to get the business back on track, but then also to go through and grow through acquisitions, because we have the platform to leverage today that we didn't have a year ago.
And acquisitions of different concepts. What would make sense at this point?
You know, we're very disciplined, and I think you need to be when you look at acquisitions, so you don't sink the ship. So we look at the brands that are out there. We want to be very careful to make sure that we inherit a brand that's got strong brand equity. It doesn't have a lot of deferred CapEx, and we can really benefit from the synergies through a G&A rationalization, bolting them onto our platform.
What about what Aditi was just talking about, how the tariffs are lowering the costs of some of the foods? Have you seen your cost changes as a result of the trade wars?
A little bit. It hasn't hit us significantly. If anything, it's going to benefit us because of all the tariffs that China's put on produce. So I think down the road, depending on where all of this goes and how it shakes out, I think it will benefit us, but time will tell.
Yeah, no, she was saying that the commodity prices have gone down for such key food items.
Sure.
That it's lower cost for the restaurant industry.
A lot of our contracts are already baked. So you have fixed pricing on a lot of your contracts, but as they come up for renewal, that's part of the discussion today.
Where are you on the pasta pass? It's sold out again.
The Olive Garden pasta pass.
Yeah, shouldn't you guys be doing something like that?
We will, and we have on a smaller scale. It's a great program for them. It's a great, advertising, marketing tactic. It's worked well. For us, it's really focusing on, bringing those guests in, taking care of them. We're all about hospitality, quality, and that's what we really focus on.
Well, if it keeps selling so fast, it means not everybody's doing that low carb thing, right? So
well, yeah, right.
probably good news for you.